Morning, Dima.
Good morning, Will. How are you?
Great. How you doing?
Pretty good. Good morning, everyone.
I'm going to share my backdrop with you, D. Any guesses?
Where that is?
Yeah.
Is that your? I don't know.
It's snowy Washington Crossing. It is freezing out there.
Oh, that's Washington Crossing. Okay.
Yeah, that's down where those are the original houses. What was at one time known as Taylorsville, now Washington Crossing, where it crossed to Delaware. But it is freezing here this morning. We got about a foot, maybe a foot and a half of snow in places. What about you?
It's cold. I don't think we have that much, but it's cold and we're getting some snow. But that's a pretty backdrop.
Well, I'll keep it this morning. We'll start with the disclaimer.
Yep.
What do you think?
Yep. So good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, contact your broker. That's what they're there for, to help answer your questions and provide you with guidance. There's a disclaimer.
Excellent. Some crazy stuff going on this morning in the silver market, huh?
Yeah, we mentioned it on Friday, and it looks like maybe something over the weekend.
Yeah, there was some unusual option volume you pointed out in a couple of the miners, but it actually is interesting because Chris Marcus, Mr. Silver from Acadia Economics, is coming on tonight. I'll attach that link at 6 p.m. this evening, so it should be an interesting conversation.
Right. We happen to mention because we will be talking about silver tonight on the webinar, and Chris Marcus, he's like just all about silver, right? That's all he follows is silver, wrote books on silver, interviews people in that field on the metals. And we talked about silver and it's an input price. And we're going to ask him about that today. Where does he see the biggest growth? Because we do see that silver is used in a lot of products, semiconductors, solar, things that maybe you didn't even think about. We'll have a chance to ask him about that today. And he was telling us, there's, I think, AG's First Majestic we're talking about. He was saying that look for the miners because those are like, if you're looking into metals, those are like the leveraged bets. As it goes up, they accelerate much faster. We'll talk about that tonight, and I think that'll be an interesting webinar. Yeah. Anyway, let's get started. We'll talk about the pre-market report, and I think today there are a lot of earnings coming up, a lot of big company, big tech earnings coming up tonight. So we'll take a look at that. And if there are any questions along the way, let me know. I'll try to answer the questions to get as many as we can. These are stocks. This pre-market report stocks moving into pre-market hours. We've got the most active stocks, biggest percentage gainers, biggest percentage decliners. I'm going to take a look first what's going on in the higher market cap stocks. I'm using the filter 20 billion market cap or higher. So one thing we see here, 91 made the percentage gainers list, 4 in the percentage decliners list. From that perspective, looks like a much more bullish opening in the morning. See here, IBM looks like an earnings. They reported earnings January 29th. They're up 10.8%. Get some other, 6%, 5%, 3% gappers, but again, not a huge amount of volume, 57,000, 77,000, 20,000 mark volume in the pre-market. Nothing that great and doesn't jump out at me. So if you don't have any questions, I might just go to the earnings, see what's coming up in earnings from, because we do have a lot of them coming up today.
Yeah, great.
All right. Let's take a look. Upcoming earnings. So we're looking at stocks expected to report earnings in the next 2 weeks. I'm going to use this filter for stocks that trade 5,000 option contracts or more on average per day. So that's this. And let's take a look at the full report. And we see here, these are coming up tomorrow, before the market opens and after the market closes. So we got a bunch of them that are in here, and we see, Google, Amazon, some Alibaba, XOM will be tomorrow before the market opens. Let me know if you have any, if anyone wants to look at any particular one. I'll just I'll focus on one or two of them just to go through a more in-depth analysis. But for now, let's just start out looking each one, what the options are expecting the earnings move to be after reporting earnings in either direction versus historical moves. So here we got MPC. They're expected to report tomorrow before the market opens. Straddle right now is implying a move of 7.6% in either direction. Keep in mind that's up or down. When you're buying a call and a put, you're buying a straddle. So you're paying premium for that straddle, and the stock has, if it moves by a bigger percentage than the premium you paid, it'll be profitable. So that's looking at the straddle, right? Implied move 7.6%. That compares to a historical 4-quarter average move of 2.4% and a historical 12-quarter average move of 3.6% after reporting earnings. So we're 5.2% above that 4-quarter average, 4% above the 12-quarter average. The high move in that stock is 8% after reporting earnings in the last 12 quarters. Exxon Mobil, that's also expected to report tomorrow after market close. The straddle's implying a move of 5.4%. That compares to a 4-quarter average move of 3.2% and a 12-quarter average move of 3%. So we're a little bit over 2% above the 4-quarter average, 2.4% above the 12-quarter average. The high move on that stock is 7.2% in the last 12 quarters. PBI, that's Pitney, I believe that's Pitney Bowes. Let me see, business equipment. Sorry, just overclicked.
No worries. Just so you know, we did get a couple requests. Someone wants to dig deep into BABA, another in XOM. Just so you know.
All right. So we'll start out with the XOM one. Let me just go down the list and then I'll come back to these. So that's Pitney Bowes. Right now, straddle's implying to move 30% in either direction. That compares to a 4-quarter average move of 14.5% and a 12-quarter average move of 13.1%. So we're about 15% above that 4-quarter average, 16.9% above the 12-quarter average. The high move on that in the last 12 quarters, 28.5%. So you see there, that's way above right now, those averages. UPS, expected tomorrow before the market opens. Straddle's implying to move as of Friday's close. We're not open yet. As of Friday's close, straddle's implying move of 8.1%. That compares to a 4-quarter average move of 9% and a 12-quarter average move of 6.8%. So we're a little bit below that 4-quarter average, 1.3% above the 12-quarter average. High move on that stock in the last 12 quarters, 14.4%. Siri, that's also tomorrow before the market opens. That's expected to move 9.6% compared to a 4-quarter average move of 1.5%, 12-quarter average move of 2.6%. So you see we're above those averages, 8%, 7%. High move on that stock, 7.2% in the last 12 quarters. I'm going to just start jumping to like the more active option ones because we have a lot of them in here. So Alibaba, someone mentioned that expecting to report tomorrow after the market, before the market opens. Sorry, before the market opens. The straddle's implying a move of 6.4%. That compares to a 4-quarter average move of 2.8%, 12-quarter average move of 3.1%, and so we're 3.5% above the 4-quarter average, 3.2% above the 12-quarter average. High move on that, 6.3% in the last 12 quarters. And you could see here, I'm just starting to see a trend that even heading into earnings, we're on the high end versus the averages. So just the implied moves, you can see Alibaba was 6.4%. historically heading into earnings in the last 4 quarters, the implied move was 4.5%, and in the last 12 quarters, 4.9%. So we're on that high end range, and that's kind of like what I'm seeing. Same thing up here. Like a look at Exxon Mobil. Straddle's implying a 5.4% move. Now that could be because we're down on Friday, so just in general, implied volatilities are going up too. 5.4% versus 4-quarter average 3.3%, 2.5%. So these are what the straddle was implying on average, versus this is the realized move, what that stock actually did. Okay, so that's the difference. This is the day before. That's what the straddle on average was implying, versus this is what the actual move in the stock was the day after. So that's how that's these two benchmarks. Let's skip down. We just did Alibaba. Let's skip down to Amazon. So Amazon, that's expected to report tomorrow after the market closes. Right now, straddle's implying a move of 6.4%. That compares to a 4-quarter average move of 6% and a 12-quarter average move of 4.1%. So you see here, kind of in line with the 4-quarter average, 2%, 2.3% above the 12-quarter average move. And the high move on that stock, 7.8% in the last 12 quarters after reporting earnings. Google, that's also tomorrow after the market close. Straddle's implying a move of 6.2% compared to a 4-quarter average move of 4.6 and a 12-quarter average move of 4.5. So we're a little bit over 1.5% for the 4-quarter average and 12-quarter average. High move on that, 9.6% in the last 12 quarters. So let's come, I'm going to maybe come back to this list if we have time. Let's take a look at Exxon Mobil. So I'm going to go here and we'll take a look at a couple different reports to get different perspectives. So this is Exxon Mobil, the first page, which compares historical implied moves, anticipated moves versus actual moves. So these bars here, that's the straddle implied move up or down in either direction. The red bar, that's the actual move when it was to the downside. Green bar, actual move to the upside. So the one I'm hovering over, October 30th, before market open, Exxon Mobil reported earnings. That day it was down 1.1%. The straddle was implying a move of 3.5%. So you could see the move was more muted than the implied. Here, the green bar, November 1st, 2019, before the market opened, ExxonMobil reported earnings. That day was up 3%. That compares to the straddle implying move of 2.2%. So we see that move was a higher magnitude than the straddle was implying. In other words, if you sold that straddle day before, the next day, by the end of the day, you would have to buy that straddle back higher, which would have cost you money, right? If you sold it lower, bought it back higher, because the move was higher than anticipated. Let's take a look at these summary stats. So here we see historically the option straddle overestimated the move 42% of the time. In other words, 58% of the time it underestimated the move. The stock moved by bigger magnitude than the options were expecting. On average, the move heading into earnings, the implied straddle on average was anticipating 2.5% in either direction versus the average realized move of 3%. So you could see here that being long the straddle, right, on average here was more profitable in ExxonMobil. So that's from history. But we see today, right, that we were looking at the implied move, which is much higher than this. So now we're on the high end of the historical implieds. Let's take a look at what happened to the implied volatility after the stock reported earnings. So we see here, we're taking a look at the 30-day IV. So this is an option with 30 days to maturity. So we're not looking at the very near term. Remember, the further you go out, the more vega you have. So we're looking at an option with 30 days to maturity. So on average, day after reporting earnings, the implied volatility was down 9%. Here, on average, implied volatility on that 30-day IV was 26.3. Day before earnings, day after, it fell to 24.6. 5 days later, it fell a little bit more, 23.2. But again, right now, we're on the high end. So here's a 30-day IV now, 45.7 versus this average. So I'm just going to scroll down here, and here are the data for the last 12 quarters. So you could see here, this is the average we're 2 days before. So right now we're at 45.7. All right, the average 27.2. So we're on the high end of the historical range. Let's take a look at what the stock did post. We might as well look at all these reports here. So post earnings drift. And this is taking a look, what did Exxon Mobil do? After reporting earnings, the last quarter, it repriced, right? So this stock repriced. Of course, it has still time in between earnings where there's a drift. And during that drift, investors are now pricing in expectations for the upcoming earnings. So you see this green line, this is where we are now. Since the last reported earnings, we're starting the day after that, the Exxon Mobil drifted up 40.8%. So that's where we are now. It's increased 40% since last reporting earnings. On average, you can see here, it's been doing poorly. So on average, it's been declining between earnings. And you could see here, this is a one standard deviation move in either direction. So in either direction, a one standard deviation move is 7.1%. Between earnings, it's up 40.8%. So you could see here, that's a massive 5.8 standard deviations based on historicals. So you could come down here, take a look how the historical drift, what the price reaction was afterwards. So this is this red one, that was the historical drift to the negative side. Green one's historical drift to the positive side. That blue bar, that's showing you what the price reaction was after reporting earnings. So you could see here, there was a drift previously down 20.1%. After the stock reported earnings, it was down 1.1%. So that's how to look at that to get a sense of what kind of expectations prior to earnings is being built up into the price.
Just confirming, Gree, the light green one, that's the implied move. Is that the deal?
This has nothing to do with options, Will.
Oh.
So after a stock reports earnings, right? Well, there's a price reaction.
All right.
After that, there's about 3 months until there's another earnings report, right? But the stock doesn't stop trading. So it continues to trade. And in between those dates, the stock will drift either up or down, right? And this is the drift of the stock, right? This is what the stock actually did since last earnings. It's up 40%.
Gotcha.
Okay. So what this is letting us know is if the stock's up 40% and it hasn't reported any earnings in between, that's the market's pricing in what they're expecting, the next earnings to be in the stock price. Does that make sense?
Yep.
All right. This has nothing to do with the options right now. Let's take a look at what it did. These are Exxon Mobil's. Actually, you know what? I'm going to reference this report really quickly, the implied value. And I think I'm going to be pushing this out this week. It's going to look a little bit different than you're seeing it on my screen right now. But this will be, I think I'm pushing it out sometime this week. So here in Exxon Mobil, we're going to take a look at what we think the implied value is based on historical multiples. So here we see that this is the average 3-year average PE in Exxon Mobil. If we revert to the 3-year average, this is the price. This is the implied value of Exxon Mobil. This is the 3-year average price to sales. So total market cap divided by total revenue, right? If we revert to that mean 3-year average, this is the price of Exxon Mobil. Then we compare the relative PE to SPY, to the overall market. So we see here that currently Exxon Mobil's PE is trading at a 54% premium to SPY's PE. Historically, it traded at a 35% discount to the SPY PE. So if we revert to that long-term average or 3-year average, that's the implied value of Exxon Mobil. Then we do the same thing with price to sales. So historically, if we look at Exxon Mobil's price to sales relative to SPY's, it's traded at a 66% discount. Right now it's at a 57%. At a 57% discount. If it reverts to that, this is the price of Exxon Mobil. So if we take the average of all those multiples, we're at 3504. So here, what this is telling me, you could see the range. It's very wide because I think the earnings are jumping around. So if we go just to the price to sales, about 50, 57. So they haven't been, it looks like, they haven't been executing on the earnings front. That's why it's like that. If they come back to the earnings front, get more profitable, these might go up, but you see the range from 57 to 14, depending how they do on those earnings. The average 3504. So I think if they come back and they beat, you can go back to these levels, right? 50, 57, just revert back to the price to sales ratios. Let me come back to, let's take a look at the stock patterns. Let's see how it tended to do prior to earnings. So we see here heading into earnings, before earnings, on average, the stock tended to make gains, but you can see here the percentages are small, and heading into earnings, like maybe these are the best 2 days before, day before, it tended to make a gain 67% versus 33% of the time losses. After reporting earnings, tended to be weaker, 67% of the time, it gapped lower, 33% higher. We see from the opening price, average move from the open to the highs 1.5%, average move from the open to the low 1.5%. So they're very equivalent there. From the open to the close of the day, on average, it was break even, and 67% of the time it floated higher, 33% lower from the opening price. So that's stock pattern, how it tended to behave after reporting earnings. So price distribution the day after reporting earnings. Let's take a look at how it reacted to positive and negative surprises. So we see here, this is last time, October 30th, it reported earnings, negative 18 cents. Wall Street consensus was negative 25 cents, so beat there. It beat on the revenue, up 2.5, but we see that it was down 1.1%. So I'm hovering over, this is October 30th. So we see that the stock was $32.97 the day before earnings. The day after it reported earnings, it fell down to 32.62%, so 1.1% lower. Right now we're at 45. So remember, you were asking about the drift, Will?
Yep.
You see it? Closed at 32.62. We're at 45. So obviously, whatever it is, after reporting earnings, everybody repriced. And then since then, and the market's drifted higher too. So it has been, getting pulled up. Everything's been pulled up. So it might not be just stock related. Some of it is market related. So some of it is getting pulled up with the rest of the market. Keep that in mind. And it looks to me like right now, these are the expectations are that it's going to eke out a profit, right? 1 cent, but it's going to eke out a profit. And its revenues expectations 48.8 billion. But look, compare that to the 4 quarters in 2019, 65.2 billion. So look, I'm going to hover over this. You know, when we were at 65 billion, the stock was 62 bucks. All right. Right now we're at 45 bucks. Obviously, there's, you know, that's the revenue. So you could see here, big revenue drop from prior year. And you could see like even since 4th quarter 2019, some big revenue drops there. That's really quickly Exxon Mobil. Are there any questions on it?
The fundamentals tab, D, is which premium service is that a part of?
So this will be, it'll be part of the stock trade. You know, we're going to just put part of stock trader and total access. So that's
Gotcha.
what it'll be.
It's not available yet. That's the big thing.
It's not available yet. No, it's going to even look at even this version that I'm looking at is a little bit more dated version. I have a newer version, but it's not available yet. I think this week though, I'm gonna push it out. It's gonna look even different than this. It'll be the initial version because even, you know, I'm kind of already on like stage 2 or 3 of it, but I'm gonna put out like stage 1. You know, so I think it's going to be actually this is what will be coming out there. I think I'm going to call it like fair value because people refer to usually fair value. I call it implied value. There'll be also a payout diagram. So I'm going to push that out. And what that will do is allow you to put in an estimated earnings and estimated earnings growth. And you'll be able to calculate if based on, you know, your earnings growth expectations, how long will it take for you to for the earnings to equal today's stock price, basically double? How long will it take you to the stock to for the stock's cumulative earnings to equal today's stock price? Because that's usually like the benchmark you use. Is it like 7 years, 10 years, 15 years, you know? Because if you're investing in a stock, really you're investing in its future earnings. So that's also going to come out. I'm working on.
We actually had a question from Mike who was asking about something I know you've been working on. He's asking the estimated time for the insider buying versus buy sell stock patterns. I'm not aware of that, but
So that I'm also working on. There are many more exceptions than I was expecting on that, so it's taking me longer. But we are working on more insights into insider trades and getting a much better breakdown of what's going on there. You know, so there a lot of these insider trades are part of something. Some people are just reinvesting in their 401k. Some people have a trading plan where it's automated buying or selling on certain dates. Some of it is like, you know, somebody just bought it for the first time. Some of it is cluster buy. So all this we need to kind of work out. And I'm sure once we push it out, people are going to start finding exceptions we don't see. But at least as I'm seeing the exceptions, we're trying to handle those internally. I don't have an estimated time for that one because that one's more complicated as I'm, you know, peeling off the layers of the onion.
Yeah, well, I think it's great that you show everyone what you're working on. It's super helpful, and I know we're getting feedback. Jake just said on the chat that there's some great new videos posted in the Discord group. I don't know if you've been on, D, but a couple of the chameleons, well, actually one in particular, Goat Roper, he's posted a couple of videos of what he does to relax. And everyone should go look. I mean, it revolves motorcycle jumping and motocross. I mean, they're pretty incredible videos. And actually, Pavel mentioned today, I'd love to see him post a video from the Polish. He's in Poland, cross-country skiing today, trading from his cell phone. So a lot of good stuff going on with the chameleons out there, Dima.
Lee, what do you do, Will, to relax?
What do I do to relax? Talk to you, do a morning show. This is it.
Yeah.
Relaxing right now. This is our joy.
Yeah. All right. Well, we're up to 9:30. So everyone, thanks for joining us. Hope to see you tonight on the webinar. I think it'll be interesting talking about silver, and stay safe out there. Have a great trading day. We'll see you tonight or tomorrow morning.
Yeah, great job.